To us, this is $1, right? Welcome again. But this is the Impact School of Money, where our mission is to change the way that people are educated on money. This is episode 7. The purpose of the Impact School of Money, 1, is to learn real-world rules of money. Purpose 2 is to learn how different financial concepts, principles, products, how they actually work. And then purpose number 3 is how it applies. So how it works. So, back to our dollar bill. So this is a dollar bill, General Washington, right? To us, this is $1, right? It's $1. If I go down to the store and I give them this $1, it has $1's worth of value, right? If I give it to the IRS, what is it? If I put it in a 401k, what is it? If I put it in a Roth, what is it? If I put it in an annuity, does the dollar stay $1? Well, what's interesting is, according to the IRS, there are 4 different places that money goes, and in the eyes of the IRS, it's different money. It's totally different money based on where it is and how they tax it. And so we'll get into that in future episodes. But the thing to note is, not all money is created equal. Not all money is created equal. It depends on where it is and how it's taxed. But the thing that we're going to talk about today, starting with some of the most basics of money, is it's not what we earn, it's what we get to actually get to keep. What we get to keep. And so one of the things that really affects that is going to be taxes and how taxes work. You know, the dollars come from an employer, they come from an asset, they come from wherever. How much of that actually ends up in our pockets? And so what we think is so we have, you know, we see the different tax brackets, right? And so you've got the 10% bracket, you've got the 12% bracket, you've got the 22% bracket, you've got the 24% bracket, and so on and so on. And so what people kind of think, and this is, I mean, this is the same thing that I thought, is that, you know, here's my dollar. I earn dollars here. I look at the little chart, and it says I'm in the 10% bracket, so all my dollars are taxed at 10%. But then if I make an amount up into the 12% bracket, all my dollars are taxed at 12%. Then as my dollar goes up and I make, you know, this amount here in the middle of the 22% bracket, that's going to mean that all my dollars are taxed at 22 and 24, because we hear these things that people say is, well, you know, I don't want to pull out too much, or I don't want to make too much, or I don't want to whatever, because then I get bumped into the next tax bracket. Have you heard this before? I'm sure you have. You know, where you're talking with a tax person, they're like, well, if you did that or cashed this out or did whatever, then that bumps you into the next tax bracket. It bumps you into the next tax bracket, almost and then we get scared of that, or people get scared of that. Oh no, well, I don't want to go into the next tax bracket because then all my money's going to be taxed at a higher bracket. Some of you know this, maybe some haven't heard this, but is that how it actually works? And so if we jump, let's jump back to the computer and look at something really quick. This is what we're used to seeing when people talk about tax brackets, right? As we look at this, and it says, here's the tax bracket for 2018, taxable income for people married filing jointly. And so you see the different brackets there, the 10, the 12, 22, 24, 32, 35, and 37. And those are the brackets with the Trump tax reform is what changed. And you can go back if you just Google tax brackets for 2017, you'll see the difference. So what it shows is it says 0 to 19,000, I'm in the 10% bracket. 19 or up to 77,000, I'm at 12. 77 to 165, 22, and so on and so on and so on. And so that's kind of how we see it. And so we assume that if I made, let's say that I made $77,401 one year, people would say you're in the 22% tax bracket. And I assume that that means me and my income, all of it, is in the 22% tax bracket. But how it actually works is better described here. So this looks a little bit confusing, but when you read it, you're like, oh, that makes sense. So my tax on the right column, if I make anything up to $19,050, that's taxed at 10%, which is $1,905, right? Then everything from starting at $19,050 up to $77,400, only the dollars between those numbers are taxed at 12%. So if I make $77,400, I pay $1,905 because my first $19,000 is taxed at 10, plus 12% of anything between $19,050 and $77,400. So going back to my previous example, if I make $77,401, my first $19,050 is taxed at 10%. My next $19,000 to $77,000 is taxed at 12, which is $8,907, and my $1, because I make $77,401, only $1 is taxed at 22%. Because 10% plus the 12%, and then 22% of the excess over $77,400. So again, some people that may be watching this are like, well, no kidding, I always knew that. But you would be actually surprised at how many people don't. How many people don't know this of the years and years and years I've met with people, that it's only the dollars in the bracket that are taxed in the bracket. So going back to this, if I only make $200 pours over into the 22% tax bracket, only that $2 is taxed at 22%. Okay? And we're not by any means giving any tax advice right now. I could throw that disclosure in there. It's just understanding how taxes work and how to better put dollars to work for us instead of working for the dollars all the time. So let's go back to our friend on the dollar bill, Mr. Washington. So it comes down to the money is either out working for us and we're attacking and we have a plan of attack and we're putting these soldiers to work for us, or we're being attacked. We're being attacked by an army called lack of knowledge. And understanding these rules and principles and how they work, put this money to work for us and give us a better chance of winning. In seminars that I do, I talk about rules. The rules of money that you're learning by coming to the Impact School of Money are just rules to a game. Money does not care who you are. It doesn't matter where you come from. It's totally biased. It's not what you make, it's what you do with what you make. And it's either you have wealthy money habits or you have poor money habits. And it's complaining about it doesn't change the fact that we know or we don't know. And so in high school, I played basketball and soccer. I understood the rules of basketball a lot better because I played my entire life. In soccer, I played up to third grade, and then I played again my junior year of high school. Well, not understanding the rules, you could imagine how not good of a player I was because I didn't understand the rules of soccer. I didn't understand why they kick the ball backwards all the time. I didn't understand why do they on purpose kick the ball out of bounds. I didn't understand why the ball can land on the line and still be in, why a person can be standing out of bounds, kick the ball, and as long as the ball is in. I mean, these are just rules that you could imagine, not knowing those rules, how that would affect how you play. And so the question we pose to people is, when have you learned the rules of money? And the better that we understand the rules, the better chance we have of winning. It doesn't guarantee a win, but it by far raises our chances of winning, putting dollars to work for us instead of only working for the dollars. So, thank you for tuning in to episode 7. Have a fantastic day.